Nasdaq is printing all-time high, S&P 500 is printing all-time high, crypto is lagging, and BTC is really not doing well here. So what's gonna happen when S&P and Nasdaq gonna reverse 10 or 15 or 25%? That's gonna be ugly. And since I joined the channel, I was telling you guys, stay away from crypto. 1 month ago, when everyone was bullish at 71K, I told you multiple times, I'm not buying below mid 50s or lower 50s. Is it the time to step in right now when everything is so much down and much of the altcoins are 50% off? We're gonna make life-changing wealth in any market, no matter what the market gives. We're gonna take the best out of it and we're gonna share our knowledge. And here we start. My name is Russ, it's Wednesday, and here on DataDash, we're gonna start. Let's go. So first of all, my model, the one that I have been showing last Wednesday, is still showing us that we're mid-term and short-term bullish. What does that mean for those who missed? Let's have a quick look here. 2 points on mid-term alignment, 2 points on short-term alignment, overall 4 points. I'm bullish, but there is a bit of a trick. S&P 500 and Nasdaq are now both overbought short-term. I hate using the word overbought, but unfortunately that's what many people consider the signal for the profit taking. So that definitely can hold the market back. And Pavel said yesterday nothing new. He's going to speak today on Wednesday once again. He did say that based on his 2 mandates, things are more balanced, meaning chance for inflation versus chance for job breaking down. So he said it's much more likely cuts than hikes, and this is bullish as well. That means he continues to lean to cut, and the only bearish part is actually depending on how quickly the jobs would fall apart and how quickly the jobless claims are gonna spike. Because if jobless claims are not spiking, that's all good, but if they actually do spike, I think it's bearish because the Fed probably gonna cut, but too slow, and a market would consider that Fed caused the recession. And then think now of the portfolio managers. Some of them are just doing S&P 500 and Nasdaq, taking 2% from the volume, and they're sitting on a nice profits. Would they like to lose these profits, or would they like to take those profits? Most probably they would like to take those profits and then can start the process of a continuous profit taking across the market. So this is something to be aware about. And as I said, if crypto right now with Nasdaq and S&P printing all-time high continuously is not gonna behave as of now, what's gonna happen when that profit taking would start to happen? But at the same time, we're gonna go into the charts right now and see our short-term plans. We don't need to have a crystal ball in order to make markets. We don't need to predict the future 6 months from now. We simply can analyze our levels and see the reaction on those levels in order to make an aware decisions. And here I am to teach you how we're gonna do that. Exactly, as I've been telling, 2 weeks ago, Euro USD gave us a great bounce here of 1.5% almost. And DXY currently could not reclaim this range high. Have been tapping multiple times into here and here and here. And what we are having right now, that is always rejecting. And if we're gonna reject once again here, I'm definitely looking forward to see our range low of 100.7. 100.7 is going to bring us here all the way to the range low, and that's going to be extremely good for the risk on assets. Is that going to happen right now or not? Let's see. I decided to keep things a little bit more simple. I realized very often when we speak about things like cumulative volume delta and open interest, it's slightly overwhelming for the new traders. So let's adjust to everyone's capabilities for now, and then we can always have a few more courses for those who'd like to go and study more. But I'd like to also hear your feedback, guys. If what I'm explaining, or what I've been explaining for the last 2 months, was slightly overwhelming from the dimension of the novice trader, please let me know, because I'd love my content to be easy digestible for all categories of traders. But at the same time, of course, I'd love to bring more knowledge. And my role here is to educate and not just to give the market review and analysis like many others are doing, so that you can fish without me, and later on do your analysis yourself. What do we see here? We see the reclaim. Is it good or bad? It's good. Market structure is broken. Bullish break. Higher high. What do I want to see here? I want to see here that level of 58.5 thousand held and reclaimed, and then it's good. And then I would be looking for longs. But keep in mind, tomorrow is Thursday, and what happens this Thursday is the CPI print. So things can go really multiple directions, especially since oil has been accelerating so much in the last few weeks. And I think here it's actually a quick time to look at oil. We've been taking the trade on oil in my Telegram alert group multiple times, made nice money, and I see that a lot of you have been asking me when I was on holiday related to my birthday, okay, what's going on right now with OIH? What's going on right now with USO? So oil is very important to predict the Bitcoin moves, and not so many people are understanding this well, but we do. So now we jump into the oil. And what I'm seeing right now is the same thing we just saw on the short-term time frame on BTC. And what I mean by that is the retests of that range breakout. So here we are on USO, which is very much similar to the future contract of CL. And what I'm actually more interested in is the 1X Oil Services ETF. And here we went long in this area with our stop loss around 292, as illustrated a few weeks ago on the Telegram group. You see the trade in here. As you understand, I cannot provide that frequent updates here on YouTube, of course, twice a week, but I am doing it for free for the newsletter subscribers. So if you wish, I think it's less than $1 a day, and you get all the signals from me, also including silver, including commodities, including uranium, including oil, but also including crypto and others. Give it a try, and yeah, if you don't like, you can always unsubscribe. There's not a problem, but I want to invite those people who are already the subscribers also to find my channel. For those, you'd need to send an email and get your Telegram handler activated. So coming back to the chart, I still think that 1X Oil Services ETF is not done at all. Here we are on the hourly chart. Here we are on the daily chart. You remember here I was explaining the idea of the wheel, how you can run the wheel, option wheel strategy. And here we are still in this consolidation, and I would love this fake out to take place, this kind of fall out of this consolidation zone, and us to reclaim that level and spike further towards those levels. So obviously oil spiking is putting a lot of pressure on the risk on assets. DXY falling down is giving them the breather. So who's gonna win? Well, we need to observe. And what I personally would like to do here is to stick to the Monday range. This is a very simple strategy that we discussed in one of the videos. And you can see what happened here, that we swept this Monday high, and either we accept above and long. And in this case, of course, I'd like Jerome Powell to give some confidence to the markets and the CPI print to be well, but we might be front run, obviously. On the other hand, what is actually other potential scenario, taking this week into account here, that we can bleed all the way down to Monday low, swipe either previous week low or just Monday low, accept above, and then I would go long on the Monday low into the Monday high and potentially higher. So that gives us two possibilities here. If you are feeling not extremely confident on what this possibility would do, or you're not in front of your screens all the time like I am, I recommend you to do a simple thing. That simple thing would be to proceed with the link in the comments down below. Get my Bybit activation offer that allows you for $500 free trade on leverage. You don't have to deposit a lot of money there. Even $100 will be enough. Please just do the process step by step. Don't miss anything. And then you actually go into the tilt trade, and you can enable, as exactly how we've done it last time, the same logic. You remember last week I told you so many lows, poor lows here, for example, on Filecoin, on 4hourly. So we placed a lot of bits here, and some of them were filled and already in a nice profit. The same thing you can do in case of Bitcoin. What you need to do here, you are going in Bybit, you're typing BTC, and you select the pair. Of course, you want to trade USDT or USDC. and then you are enabling your bids here. You might decide, okay, 54 is slightly too low, we might not get there based on the charts that we just observed, and I want to start bidding already from 55 because probably we're not gonna swipe the Monday low if there are good news, good CPI, and quite a dovish Jerome Powell stone. And I would like to start bidding all the way from, for example, 55. So you enable here the trade from 54,000 all the way to, let's say, 57,000. You go into scaled here, there are multiple options, and you decide the size of your trade. So I'd like to bid, for example, $50,000, split into 10 orders. I click on preview and I see how they distributed. The funny thing, or the good thing is here, you can also decide, for example, how you would like the price and the volume of those trades to be distributed. If, for example, I want more bids to be to the lower part of the range, which I actually kind of recommend so that your average entry price is getting more beneficial, then you click here, and the same you can apply with distribution of those trades, right? So you can play with that function. That's a curve function. You can of course adjust things in a bit more precise manner. Wanted to give you this idea, this understanding that you don't have to enter everything all at once and then be worried that your stop loss is getting hit. You can decide, for example, to allocate just a random number, 50,000 into the trade, but this 50,000 is going to be split. And even if the trade is not bouncing, the level is not providing the bounce, the Monday low is not acting as the zone where the buyers are stepping in, because you've scaled into the trade in such a flexible manner, your invalidation point would cost you so much less. And this is why, guys, I'm teaching you all of those little details, because I absolutely hate people losing the money in the markets, especially in the altcoin markets, buying something because there is a huge hype around that and then sitting on it, seeing how the things are bleeding 80% down, right? I'd like to have a little bit more control around the price action, and this is why all these tricks come in very handy. There is actually one more thing that gives me an idea that Monday low might not be swiped, and this is this constant TVAP or bid that I see, for example, on Coinbase. Whatever the price levels are, as soon as we get a dip, I see the new buyers stepping in aggressively, and cumulative volume delta is raising here. And a similar type of picture I can also observe when it comes to open interest. Open interest is rising, price is rising, cumulative volume delta is rising, and it's also applicable to spot. Spot here you see in blue. So in that case, I don't want people, especially the people who trade intra-week, to get a little bit too greedy, saying, you know, I would wait for 52, and what if 52 does not come? And the reason also, one more reason for why 52 might not come, we're going to look at the chart. We are actually in this pocket of deviation that we kind of lost the range, and a lot of people thinking, oh my God, we lost the range and we're going to go much lower. And when everyone is becoming bullish on crypto Twitter, when everyone is start to short at size, posting their shorts, that it's also very often that we have a technical bounce. What I mean by technical bounce, it does not mean that Bitcoin goes from here to all-time high. It means that so many people are short and at a very late point. And when someone is getting short, what happens to market maker? Market maker is obliged to go long to provide you the liquidity. So if market maker is long and the price supposed to bleed more down, market maker would find a way related to the news, related to Jerome Powell keywords, related to any CPI trigger, to make those spike, to liquidate those long shorts and then continue down, but making sure that they rebalance their positions and they are not long for the price to go down, because market maker doesn't want to make such a disservice for themselves, to have a huge, large positions where they're gonna be not profitable. So what happens if, for example, fundamentally, as Nick been observing on the multiple last few weeks, what if actually Bitcoin starts to bleed here and we lose the momentum and we going, for example, to 40s? Do you think that market maker want to keep their long positions bleeding into 40s? No way. They're first gonna spike it up to 61K, making sure that all those shorts which were in the bottom of the range are liquidated, making sure that everyone on YouTube is starting to cry about us reclaiming 60K up only, people getting long, and only then the price goes down. So be very mindful about that, about both sides of the trades, about hybrid strategy, about market makers acting towards their own benefit. And so what is that important here, why I'm taking time to speak up about those? This is all technical. That has nothing to do with fundamentals of Bitcoin. That has nothing to do with ETF inflows. That has nothing to do with the fiat debasement, with Bitcoin being a hedge against inflation. This is all irrelevant right here. But those fluctuations, 5,000 up or 5,000 down, can happen intraday just for market makers to rebuild their positions. And I want you to start building those understanding why those things happening and separating those technical moves and fundamental moves and trying to see both sides of the equation. Now looking at Ethereum, I think we are doing actually quite okay. Everyone is worried that Ethereum is trading as if ETF has been cancelled. Don't worry about that. As soon as we are holding 2880 level, this level here, or 2850, the level that is marked on the screen, I think we're good. We can do something like that, which would confirm our higher high, and then I would also provide us a little just oscillator reset into our high low, and here we are. And actually, for those who is wondering how do I spot the reversals, this is exactly a very typical reversal pattern that I called a failure to lose. And failure to lose manifests like that. We have a huge drop here, we normally bounce, then we have another drop which is slightly above, and then we are printing the higher high. And what I expect from there? I expect from there the higher low and the reversal. This is the game, the playbook, the typical reversal pattern. This is the game play that I normally love to take, and we're gonna study and speak more about those in our group, in the academy, in all the online courses that me and Nick are gonna prepare for you guys. What is super important here is to, of course, keep in mind that there isn't always a potentiality for invalidation. Nothing is for certain in trading. So if, for example, I want to beat Ethereum here, I also don't want Ethereum to bleed below this 2800 level. I don't want us to start accepting back then I cut. But as soon as we are able to scale here, and once again, I'm gonna scale, I'm gonna DCA, I'm not gonna enter everything at 2950, for example, because maybe we are front run by $10 and we only can be filled at 2960, so I don't want to be out of the position. I'm gonna beat in the zone 2950 to 3050, so to say, you know, in this $100 zone. And then I would actually aim at targeting the key level of 3260 and 3500. Let's mark them on the screen for those who might not hear me well. 3250, and as this is our TP1, you can take 30% or 40% of here based on your risk profile, and then the second level will be 3500. 0, you can take another 30-40%, and then of course you'll let your moon back 20% in the moon back. You keep it running, so that actually can become a very nice swing trade. You know, guys, I was thinking of giving you a couple more altcoin trades here, and of course I will do that in a second, but I think this is like actually quite a high probability trade that I like, just based on this reversal pattern that we are observing on the screen. Please keep in mind this pattern once again. Very extended drop down, bouncing a little bit, failing to accept lower, higher high printed, higher low printed, and we reverse. There can be variations of those. We will discuss them, of course, but this is the typical one. Another altcoin, the big one, which I really like here, and I'm taking that trade, is the Dogecoin. So you see here how we are starting to consolidate below this resistance line. This 4-hour hammer candle gives me an idea. It's not yet a conviction, it's an idea that we might actually accept above this resistance, and then we're gonna take that liquidity here, this liquidity of the order block here, and this liquidity here. So I'm gonna have TP1, TP2, TP3. My invalidation is below this week. I don't want us to accept below 0.105. So that's a very nice trade manifesting here. I see the risk reward ratio at least 6, so I am taking that trade. Let's analyze the market, or I actually already have done it for you, and see what do we have else. Let's take Solana for example. I think Solana is really struggling with reclaiming this 144.5 level. So what happens in those cases? People start to profit take, and it's okay if we are doing something like that. So my first level, when I would expect the bounce to take place, is 134. My second level will be 125. So those are two opportunities for me to go long, and normally I'm doing it with the soft stop loss with a very tight invalidation, scaling in as I showed to you on Bybit via Teal Street. And that allows me to just see on the 15-minute time frame how do we start accept around this level. So what I'm looking for in those cases, I'm looking for a definitive reaction on this level. I don't want us to stay here for 8 hours, so to say. I want the buyers to step in and the price start to develop. And normally I am looking, of course, in 5 and 15 minutes, smaller time frames, if we are able to start printing the bullish market structure. Please don't forget what the bullish market structure means. It means that we were dropping and suddenly we start printing market structure break. So that high is higher than this high is higher than this high, but also the lows are getting higher. So this is the reaction I want to see at the level of 135. And if the 135 is not providing this reaction, because I am DCAing, I'm not entering everything in 135. I am happy to do the same trade here around 125 all the way to 142. And once 142 for Solana is reclaimed, then of course we can also go significantly higher. You see those levels that I've marked before, and this is the levels I've marked a year ago, 2 years ago. The Solana is still actually following them quite well, because that's a lot of beats and a lot of buyers and sellers are stepping at the zones. Guys, I'd love to give you more updates on stocks, on value plays, on silver, but since the time is running out, let's just quickly analyze here silver chart. And I of course provide much more updates in the Telegram group, because there I have everyday access to you. On YouTube I unfortunately can't do that. It's also, I think, will be too much information if you're gonna speak every day on YouTube. So let's have a quick look on silver chart. Silver is giving us this very clear bullish falling wedge pattern, and as I said, as soon as we are able to accept and hold above the 31.5 level, then all the correction targets of 26, 28, 28.5, this level as well, I would look for the first one, they are invalidated. They are invalidated, and we're going much higher from here, and we're going to print damned 5x on many of our junior miners. But if it happens that we are struggling due to CPI, due to other macro data, due to simply gold, how is gold doing here? Let's have a look. Gold is looking quite okay. But what I like to see on gold is, of course, to break out of that pocket that is highlighted in pink on the charts, right? I want us to start accepting above 2400, then I will be more confident for gold. And one more chart that, of course, you see I'm looking very often at is gold to silver ratio. And gold to silver ratio is actually telling me here that we are doing quite okay. Let's have a quick look on gold to silver ratio. We are on the daily, and you see how we've been trading perfectly, losing that range, retesting it, bouncing and going down all the way. Don't forget, my targets are mid-term 40 to 50, long-term even lower, just simply based on the fundamental amount of silver in the earth crust. That's going to be much lower in a few years from now. And if you remember here on DataDash, we went long silver here on a very high extreme 91 gold to silver ratio. I don't know anyone else who've been actually in the trade that early. Right now, more and more people start to speak about silver. That's okay, but it's important to be building your conviction and to build your positions on these extreme moments. And these extreme moments we haven't seen for a while. Like last time we were, this ratio was 2023, and actually that was pretty much like the highest we ever had historically. So what's going to happen to silver when gold to silver ratio goes down to 40 or 45 or 48? Doesn't matter. Silver will be at $48, $50, right? So that's also important. A lot of people in the comments were asking me, Russ, I am feeling worried. My miners a few percent down, sometimes 10% down, sometimes 15% down. I am always explaining that it's important to be allocated, maybe not 100% if you worry so much. Maybe you would like to DCA lower, but the companies, for example, like Sibanye Stillwater Limited, we've been entering on all these drops here, and you know what's gonna happen when palladium prices are gonna correct, just mean revert. We're gonna be at 18 or at least $12 from here, so we're gonna make at least 150, 250% in profit. And everyone is also like still sleeping kind of on this trade. And the reason for that, because people are afraid. People are afraid to long something that doesn't look so sexy right now. Look at where we are in Palladium. We were just recently, just a year and a half ago, we were at around $2,500 per ounce. And right now we cannot even reclaim $1,000, but we start to form this bottoming formation, in my opinion. Can it be one more swipe down? Maybe yes, it can. Maybe it's not going to happen because so many buyers are stepping in. So what I want to be in, I want to be in the hated asset classes where everyone is afraid to touch. And I'm going to also we covered this interview of Manish Babrai in a Telegram alert group where he speaks his experience, how he actually built his multi-billion-dollar wealth, always buying these hated industries with price-to-earning ratios of 2, 3, where everyone were scared to even look at their balance sheets. That's the same what I'm doing right now, and everyone is talking about NVIDIA. I am allocating more and more into the commodity miners, and I see that everything at certain point mean reverts. That's normal because that's how hedge funds, that's how market makers, that's how large institutions are also operating. Before Alameda collapsed, before FTX collapsed, you can go on their website and you can see what are their trading strategies, and one of them will be always mean reversion. So the huge deviation around VWAP or around 200-day moving average are normally being recovered. Nothing can deviate from 200-day moving average forever. So this is something I am betting on, and for those who does not have the time to actually scalp and monitor their trades very frequently, I recommend you to start learning more about commodities, and that asset class can provide you life-changing gains. On the other side, crypto is also something, if you master the scalping, if you master this intraday trading, something that I've been showing to you is Bybit, with Steel Street, with all those cascading scaling orders. It's also another magnitude of returns that you can achieve per year. You can take your portfolio 200, 300% up in a year. That's something that is very unlikely to do with stocks unless you're like really mastering the options, but that's obviously a different degree of safety and different strategy. And that's why it's also important that you see all the range of various strategies. That's why I'm speaking about different asset classes, so you understand what suits you, what doesn't suit you. Are you comfortable if it's 40% per year? Do you really need 100% a year to make it? Because someone starts with $100,000, someone starts with $10,000, and someone starts with $1,000, and it's all fine. That's why we're here. And with that said, guys, I'm sending you much love. I'm gonna see you all on Friday, and we're gonna talk more about strategies, about reversal strategies, about trading strategies, about various other tailor-made ways of making money in this market. And don't forget what I'm here for, where the wealth inequality is raising. I am personally not very happy about it, so I want to give everyone an opportunity to grab their hand, to take a little bit of that 20 plus quadrillion dollar derivative digital cloud, 80% of which are expiring worthless. Take something that you need for your community, for your family, teach others, be strong, be wealthy, And with that said, I see you soon. Much love.